Good morning. Just before entering this simple session, I want you just to get to some moods. So let's get into some music first before I get into the content matter. Yeah, so we can just go right in. So I felt like sharing some finance vocabulary, given the importance of finance in business companies. Let me just say everything that goes around the economy. Economics is about the culture of a society, and culture of society includes working for money, saving money, spending money. So we can't afford not to talk about it. So very quickly, I put in some of these simple terminologies. They're not terminologies, let me just call them titles like vocabulary. So there's the first one there, balance sheet. A balance sheet is just a document which is prepared, a statement actually, which is prepared at the end of a given period. Most companies would prefer to prepare balance sheets annually, but you may find some companies which also do it semi-annually, which means after every 6 months. That means 2 quarters. Let's not go into that. But let's say a balance sheet just expresses the financial position of a company at that given period. Let's say it is December 31st of 2023. It will give you the financial position and it will tell you whether the company is actually is in a profitable position or in a loss-making position. If it is too much in a loss-making position, which means the liabilities are so much higher than the assets, then we say the company is insolvent. There are formats, different formats for preparing balance sheets. We don't have to go into that, but you have to know that there's something called order of liquidity, in which if you're preparing the asset side, for instance, you'll prepare them either in reducing order of liquidity or increasing order of liquidity. That can be explained later. Suffice to say that a balance sheet is a document, a statement. There's a difference between a document and a statement. That's why I keep on correcting that. Then we have a journal. Journal is just a day book, almost like a diary that you use for recording your events of the day, but this is now in a business format. So normally it's hardcovered. It has to be because you're preserving their records. So you just prepare your events in terms of transactions that you prepare per day. And then you'll transfer them later into the main entry books. Next, we have an invoice. An invoice, whenever you sell goods on credit, and these days many people buy goods on credit, you have to give an invoice which reflects the amount and the date on which the payment was made. The transaction was made, and then when is it expected. So you will send this invoice to the buyer of those goods. An important book is a ledger. A ledger is a double entry system book. In accounting language, it says that we normally use double entry, which means that for every increase, there has to be a certain decrease. If I increase my expenditure on one day, there must have been a certain account which was reduced. That's what we call debit and credit. So the technical terminology they use there, debited and credited. So if you reduce the account, you say you have debited it. If you increase it, you say you have credited it. So those are the main terminologies I wanted us to look at for today. But I also included in the process, because I was talking about this yesterday and I realized I didn't have much audience, I was talking about the meaning of quarter. And these are sample news about Apple and its quarter results. I was talking about a quarter being 3 months of a given year. Most companies divide their periods, accounting periods into 4. That means 3 months. So the first quarter, second quarter, third quarter, fourth quarter. I was talking about this yesterday, but I discovered that I didn't have much audience. That's why I decided to repeat it. So this was just for Apple, and you can see the news there. To say the company posted quarterly revenue of $119.6 billion, up 2% year over year, and quarterly earnings per diluted share of $2.18, up 16% year over year. Year over year just means you're comparing the same period this year and last year. That's what year over year means. So this wraps it up for now. We can still conclude with some more music. Yes, thanks. I've indicated my contacts down there. You can reply on that email, and the Twitter account is also there. So thank you for your time.